Tax planning. Small business and entrepreneurial year-end tax planning. Hi, I'm Leydon from Financial Focus Advisory Services. I'm a CPA, been a CPA longer than I care to admit. I've been a business talk radio host since 1999. You can see me on stocksandtaxes.com. What I want to talk about today is year-end tax planning for the small business and the entrepreneur. The first one's a no-brainer. It's one everyone's going to tell you. If you have some purchases you're going to want to make those purchases before year-end. And if you have some large invoices, some large clients you may be billing, postpone the collections until January, particularly if you're a cash basis taxpayer. Everyone knows those. But let me touch on a couple things. One thing everyone knows, you want to run a car through the business, buy it before year end. Now, another thing, a lot of us drive SUVs. I do. And I'm kind of a big guy, so I drive a big SUV. The thing is, there's a big loophole or advantage in the tax code where a full-size SUV is not a car. It's actually a truck. And you can take a lot more depreciation. For example, if you're looking at a BMW, the X3 is technically a car. The X5 is heavy enough that it's actually a truck. It's a piece of equipment because it's over 6,500 pound gross vehicle weight. This works the same with the Honda. If you're looking at the CR-V, that's a car. The Forerunner, guess what? That's actually a truck. So you can take much more depreciation for the larger vehicle than you can for the small. So what you want to do is you want to accelerate the deduction of that, take it as much as possible. So yes, you want to buy it before year end, but you may be able to get that X5 when you thought you could only afford the X3. How's that? So something to think about. And another thing is retirement planning. Everyone knows you can take a SEP, right? But a lot of people don't realize you can also set up an individual 401k plan for your business. That way you can tuck away dollar for dollar the elective deferral as any employee can. And here's a trick. If you're married and your spouse owns some of the company, she or he can do the same. So we can tuck away about $80,000 into retirement very, very quickly. So there's something to think about. Now, the differential is a SEP and the profit sharing component of the individual 401k is not due until the extended due date of the tax return. However, like every other employee, if you're going to make an elective deferral, that has to be done before December 31st. Now, it doesn't mean you send your paperwork into the brokerage firm with a check. No, the account has to be set up and fully funded. So I recommend you get it in before December 15th. That'll give them 2 weeks to get the account set up, funded, and have enough time if there are any problems. For more information on tax planning for your small business and for entrepreneurs, feel free to visit stocksandtaxes.com. Feel free to give me a call, 781-829-8626. Initial consultations are always free. All right, well, enjoy the holidays, and we'll talk to you soon.